Good morning, everybody. Happy May 15th, a new trading week, and cannot believe we're halfway through the month already, and it's still 50 degrees out. But hope there are bright spring days that are out there for everybody. My name is Joseph Cusick from the Cusick Group Securities offered by MoneyBlock. This is MarketStream.live. This is where we cover what's going on in the markets. We just covered what was going on in Asia. Now we want to take a look on the opening here in Europe. And the European markets are mixed, to say the least. Now, over the weekend, the G7. Now, for you younger viewers, this is not some new fad, new beverage. And for your older viewers, this is not some type of new, I don't know, let's say, who knows. But anyways, the G7 is where we got the big boys, the countries that pretty much so are the economic superpowers in the European region. They got together, they wanted to discuss basically policy. But what we did not hear out of the meeting is anything about nationalism, nor how they're going to continue to handle the ECB and as far as their economic or quantitative easing. In other words, their monetary policies. We didn't hear anything as far as change in script, nor rise discussion of nationalism in Europe. So really, there was nothing much that came out of that meeting that would change the markets. Now, taking a look at Germany, let's take a look at the DAX. The DAX right now is trading down 0.2%. That's good for $27 to the downside at 12,743. What's notable here is that you can see that Germany, and for you new viewers, I use 3 moving averages just to give me context of who's in control of this market. What do I mean by control? Bulls or bears? If there is an area, though, that we call that neutral or battleground, and that's in between this green line and this red line. No, those are not special lines that are going to tell you to buy or sell. These are moving averages, the 20 and the 50-day moving average. All this is telling me is, are the buyers in control or the sellers? And if these bars right now are above these lines, that means the buyers are in control, both in the short term, intermediate term. And if they're well above this black line, which is the 200-day moving average, long-term buyers are also in control. When it gets into this region, between the 20, which is the green line, and the 50-day moving average, this is telling me a battle is beginning. The battle between the bulls and the bears. And that is where I look for opportunity. That's where I also expect that implied volatility. And for those of you that don't know what implied volatility is, that is a gauge that tells me an expectation of potential violent moves in a stock or in an index or an ETF or a commodity. It gets into that region, I have heightened implied volatility. That's telling me, hey, expect that there could be big violent moves, either the upside or downside. So, looking at the DAX, we see that the bulls have clearly been in control. This is the battle, right? You see the battle right here between the 20 and 50-day moving average. It blew through there. Ha-ha! Little volatility, and the trend continues. The bulls won that battle. So that's why I use this. Nothing more, nothing less. It's good insight, it controls your emotions, and so then when I'm thinking about adding some exposure to Europe, to my portfolio, which again, this exposure could be anywhere from 5 to 20% in your portfolio. If you've never looked at your portfolio, if you've never looked at anything but your bottom line, you should drill down, see what is in there. You may have exposure to Europe, Asia, commodity markets. You should understand that. And so when you hear headlines out of Germany, like, for example, not only did the G7 meet, which are those 7 influential countries in Europe, but also there was a key regional vote in Germany over the weekend. Angela Merkel, who is currently the leader of Germany, her party had a key regional election that they won. That's important to understand because they're going to have elections in June. Again, elections bring potential volatility, and if there is any rift there, like what we saw in France when we had Le Pen against Macron, again, you saw the volatility that came into play, and then once the market had a clear understanding of who was going to lead in France, boom, the general markets, including Germany, moved to the upside. In Germany, though, watch tech names and drugs. Merck, Bayer, as well as SAP under pressure. But we saw that banks, though, are moving to the upside. You had Deutsche Bank and Commerzbank in Germany to the upside. So we have a mixed market here, but it looks like those big boys, the Merck, the Bears, and some tech names like SAP, they're starting to weigh on the market in Germany early in the session. Now, in the UK, you're clearly seeing that there's a battle that was fought, right, after a pullback in crude oil also, and we saw that challenge the UK markets. One thing that you'll have to note is that if you're looking at London, if you're looking at England, miners and energy names are going to impact this market. And you saw the battle was being fought, the 20 and 50-day moving average. As a matter of fact, the Bears thought they had some momentum. The Bulls grabbed it back after the French came out. Boom. We saw that then the real battle came on. And then right here, you see that the markets actually overtook those 20 and 50-day moving averages. The Bulls took control. Now you look at it, why? Why are the Bulls in control? Miners and energy names. Over the weekend, OPEC nations met with Russia. They basically are going to extend their production cuts, which means that crude oil is going to stay more expensive. So the names like Royal Dutch Shell, BP, they're huge beneficiaries of higher crude prices, and those names are on the upside. That's holding up these markets quite well. You also saw that there was also some miners like Rio Tinto that have been beat up over the last few weeks. They're starting to gain some traction. So maybe we're starting to see some infrastructure plays that could be on the forefront, especially since we've seen rising PPIs, producer price indices. This could be a good test for that theory, and we're seeing that moving to the upside. That's holding up the UK markets and the FTSE, which is what you're looking at right now, up basically 0.17% this morning at 12.5. You can see that right here. That's a positive. Taking a look at the French CAC. The elections are over. Now Macron has to get his government in place. It is now stagnant. After a nice pop, the bulls are still in control, but now you have a consolidation. What this consolidation means is people are thinking, what's next? And so it's going to be very critical to find out what's going on with Macron and this new president and new government. We'll see how that shapes up. Are they really going to work together? What is also important is keeping an eye on the big names. The names like Mattel and other names like Total. These are huge infrastructure plays that you have to watch in France. Also watch retail, specifically high-end retail. Louis Vuitton, L'Oreal. Those names are under pressure this morning because of the fact that you're starting to see mixed data out of China. And China is a huge importer of a lot of these higher-end retail products, believe it or not, from France. So you have to watch that stuff. If the consumer comes under pressure, whether it's in Asia or here in the United States, those names in France could come under pressure. And as always, we watch the currency markets. Over in Asia, we've seen that the yen and the yuan, which are the Japanese and Chinese currencies, they've been under pressure against the dollar. We're starting to see that the euro is gaining a little bit of a strength. This is unusual. It challenged, though, that 20-day moving average. You're looking at the ETF that tracks the euro currency, EXY. So if you do not have exposure to the futures markets or the currency markets, take a look at EXY. It challenged that 20-day and the 200-day moving average, bounced off. These are the battles we like to watch. So the euro currency is firming up at this juncture. That might put a little pressure on the European markets. A stronger currency does actually put pressure on markets. They would rather have a weaker currency, especially if they're exporting nations like a Germany, like a Japan, like a China, France, as well as the UK. You're going to want to watch the currencies. That could put some pressure not only on the equity markets, but it could potentially put some pressure on the commodity markets. All right, folks, that is it for On the Open, taking a look at Europe. We're going to be back at 9:30 Eastern, 8:30 Central Time. I'm going to be taking a look at everything that's going on here in the U.S. markets. Hey, Tesla's down big this morning, so come join us and check out why. See you here at MarketStream.live.